right. Welcome back to the Real Estate Standard Podcast, episode 17, where commercial real estate and Bitcoin collide. I'm your host, Tim Kotzman, and today is April 20th, 2026. I'm joined by our special guest today, Dan Hersey, Chris Drizga, and Kenny Alves. Each episode, we break down how serious operators, investors, and developers stay competitive and profitable in the 21st century by examining commercial real estate through the lens of Bitcoin. On today's episode, we're joined by Dan Hersey, founder of the Rhode Island Bitcoin Policy Initiative. And first, I'll hand it over to Kenny to give us an update on the Westmain storage stacking.
Thanks, Tim. As of today, April 20th, our total Bitcoin holdings are just over 4 Bitcoin. We currently have 418 million Satoshis stacked, 2 of those which we did in 2026. And year to date, we're 91% Bitcoin yield. And our Bitcoin per square foot, our favorite metric, is over 6,000 Satoshis per square foot. Our Bitcoin holdings are covering 14 months of mortgage payments now, which is pretty cool to see over a year of mortgage payments covered by the Bitcoin holdings. And we've been talking about it for the past few episodes here, but Westmain Self-Storage holds a little over 2,000 shares of Stretch, STRC, and we've received 2 digital rent payments from Stretch so far. And we should be expecting our 3rd payment coming up here in a couple weeks. What do you think, Chris?
I think I said it last week on the show. This is resilience being built in real time. Real estate operators and developers need to take note because what we're doing here is we're redefining how a resilient and just robust real estate portfolio is built, operated, and managed. So keep up the good work and just doing the blocking and tackling, especially in the bear market here. So without further ado, I'm going to introduce our esteemed guest for today, Dan Hersey. Dan, really appreciate you making time to come on here. You are the founder of the Rhode Island Bitcoin Policy Initiative. You have recently authored and introduced a bill for the state of Rhode Island, which I'm sure we'll get to here in a little bit. I want to hear all about it. But before we get to that, why don't you give the audience a little overview and background?
Sure. Thank you so much, Chris. Thanks, Kenny. Thanks, Tim. Appreciate you all having me on today. And yeah, so the Rhode Island Bitcoin Policy Initiative, my goal is to provide educational resources for lawmakers, legislators, journalists, the general public in Rhode Island, specifically around sensible Bitcoin and blockchain legislation. So the nucleus of this was it was early 2024, and I realized that we should be treating digital money like money. And ideally, if we go through all the check boxes, we all come to the same conclusion that Bitcoin checks all of the boxes of the best parts of what has made gold money for the last 4,000 years and what has made fiat money, well, good through 71, but I guess we'll still consider good for certain purposes, i.e. medium of exchange. And so I realized in doing so that we really should be if we're treating Bitcoin like money, then we shouldn't be taxed on it and having onerous tax rules by paying for a $5 or $10 cup of coffee. And so I wrote a bill a couple of years ago, decided to reach out to my then state senator. He ghosted me. It also happened to be very late in the legislative session, so not sure if that had anything to do with it. But his competitor was stumping and walking around and knocked on my door, and he said, "Hey, is there anything that you're interested in?" And I said, "Well, there just so happens to be. Let me fire up the old coffee machine and we'll have a discussion about Bitcoin." And he was able to talk the talk. I think we all have a few false starts when it comes to this. this technology and understanding. And so, of course, when I talk about Bitcoin, the first thing he asked me was a litany or a list of other coins that I am not going to name here, that I think have lost a lot of value since then. Well, Bitcoin has not quite done that. And so, but he understood the foundations, and he was a Democrat. There was a sitting Republican. As you all know, in 2024, Republicans had a very successful outing. Now, this Democrat just so happened to unseat the current Republican state senator by about 35 votes. He went ahead, and I think a lot of that has to do with grassroots. Now, again, we have worked with members of both sides of the political spectrum here in Rhode Island. Of the 113 member legislature, I think 95 or so are Democrats, so they have a supermajority. I'd almost call it a super majority. But we have worked with both sides of the aisle, and we are nonpartisan. The goal is really to provide information. But going back to the story, he introduced the bill. I was able to then testify on behalf of it, drawing a lot of parallels to what gave Rhode Island the inertia during the Revolutionary War, as the first to declare independence, etc., and enshrining religious freedom, which was a big part of how Rhode Island was founded, and realizing that we should also be enshrining financial freedom by not having a money that is necessarily tied to a state or a country or government or some sort of third party, and rather a decentralized. So that's the nucleus of how the Rhode Island Bitcoin Policy Initiative, because once I testified on behalf of that bill, I realized that there was a gap in the discourse and the understanding and the education that lawmakers were currently receiving.
Yeah, definitely. I think we're learning that firsthand here as well. The gap in education is massive. And, I think there's, some work to be done on all those fronts. Kenny and I obviously lead in really heavily into the commercial real estate world here. And there is a lot of education to be done, that's for sure. Now, we have obviously a soft spot or a special interest in Rhode Island specifically, just because Westmain self-storage is located there. But from Bitcoin aside, right, I want to kind of lay the foundation here for the listeners. As far as obviously you mentioned you guys have a super majority as far as Democrats control is concerned, but what is the business environment, the business community like on the ground, and as well as real estate? How is real estate viewed and approached from the policy level?
So we are currently ranked. There was a Wallet Hub survey that came out a few months ago, and we were recently ranked 50th in business friendliness. We are also 40th in state tax competitiveness. So these are metrics and statistics that we have to combat. Oftentimes when you have a highly regulated state, you run into difficulty when it comes to business friendliness. So I think there is some work to be done, and I know we kind of take Bitcoin aside, but I think that adding this element in and being a first mover in this area is incredibly important, because if we're on the bleeding edge of a new technology, generally speaking, every single technology that's been developed over human history, there have been winners and there have been laggards, right? The internet has produced a lot of winners, right? If you go back, the railroad produced a lot of winners. The 1850s and 40s and 50s and mining in California produced a lot of winners. And I think that ideally, Rhode Island was the richest state per capita during the Gilded Age, because at the time there was mills, there were maritime trade, and the mansions down in Newport were filled with families, not owned by a preservation society. And so I think where we've lost a bit of our luster between then and now is because we have put in onerous rules that make it very difficult for businesses to operate and therefore succeed.
Yeah. Oh, go ahead, Kenny.
Yeah, I think, Dan, you had saw some of the content we were putting out there, and you reached out, and I was glad you did. And I said, hey, not too political, like I don't even know where to begin, kind of thing. But I know it's kind of important because it's going to shape our future in a way. Because Westmain being a Bitcoin first business, we can only go so far within the current legal framework. And so doing things like the de minimis tax bill to use Bitcoin as payment, that's, very encouraging. And knowing that we have someone like you that's going to be working on this nonstop, because you're like a workhorse when it comes to this stuff. And it gives us the confidence to do this in Rhode Island, right? Like Chris had mentioned early on in some of our podcasts that it's important to select states that are going to be Bitcoin friendly or have like a Bitcoin community. And Rhode Island's building that. I think you mentioned, I wasn't even aware that there's a Rhode Island Bitcoiners group, and we're going to try to host a meetup this summer at Westmain Storage. And yeah, so thank you for coming on and explaining to everybody like what you're up to. And I know you got some plans for the future, and that's where I get really excited. Like what's next?
Yeah. I think I'll give everyone a little bit of a cheat sheet of what's going on currently in the state house or at the state house, and what we're planning for the future. But yeah, looking forward to getting down to Westmain. I think that's incredible. And to start this all off, what makes Rhode Island a great place to be able to pass this type of legislation or anything that's really on the leading edge is that we're a small state, right? So if you live in Texas, it takes you 6 hours to get from El Paso to Austin. If you live in California, it takes you 6 hours to get from San Diego to Sacramento. If you live in New York and you're in Buffalo, it could take you 4 hours to get to Albany or longer. Rhode Island, I can have a meeting with the chair of the Internet and Technology Committee, as well as the chair of the Senate Finance Committee, and drive to their districts, and I don't even have to pack lunch, right? And then I can get back to my house. Like, there are no two places in the state that are more than an hour and 15 minutes away. And so that gives this really unique opportunity to be able to meet with a lot of people at a coffee shop in their district and talk with them, not have to wait for them to, get their time at the state house. It's no, let me come to you. Let's have those conversations. And I think that's been a very fruitful part of this. That would be so much more challenging if you're in a much bigger state from a geographic perspective. But to get into this year, the de minimis exemption, so it's transactions up to $5K a month or $20K a year would be exempt from state capital gains. Now, again, what we're hoping for is that there's something that happens at the federal level as well that can hopefully merge, that we're kind of on the proactive edge of this. But the most important bill this session is the Blockchain Study Commission. It builds the evidentiary record, right? It's modeled on what Wyoming started in 2018, and they've since passed 50 bills, plus they've had Kraken move their headquarters there. I think Wyoming is the model standard. But our study commission, it passed the Senate last year. It didn't get a vote in the House. Regretfully, I wasn't able to testify on behalf of that bill in the House last time. This time we have forged conversations, had incredible conversations, and I'm elated to say that it is on the short list currently for passage. It's looking better and better that we will get a blockchain study commission passed during this session. I can't say with definitiveness yet, but I am increasingly excited for the opportunity. There's a few others. There's a Private Key Protection Act, so you don't have to disclose private key when a public key is sufficient in some sort of an investigation, whether that be civil, criminal, etc. Blockchain Economic Growth Act, which is the SBDIs, allows for economic development. But I think there's also the committee and the both chambers last session passed a crypto ATM bill that I think was a bit misguided in a way. It were some onerous laws, and I think that's the challenge in what happens when You have, and there were lobbyists from a very large organization that have been very vocal about that they put this out. But when you legislate before studying, that's a problem. And that happened with this type of bill. And its intent is correct. As always, an intent is, how do we protect consumers, but how do we also allow for businesses to succeed, right? And there is a happy medium. And when you have too much of the former and not enough of the latter, then you are no longer a business-friendly state. And I think that's a big challenge of what happened. But going forward, and I think this gets to the next point, is what I would like to do is put together a comprehensive act that builds off of the de minimis exemption and builds off of hopefully the success of the study commission, and that it's introduced at the time the study commission is starting, so that the members of that commission can review all of these new bills, because to me that will be the first review process. Is, well, they're not going to just make up bills. They're going to have people come in, present from different areas, different expertises, and talk about what this transformative technology can do. And so ideally, and we can maybe get into the specifics a bit, but I'll keep it fairly high level, is that I'd like to have a bill that lets Rhode Islanders pay state taxes, fees, and fines in Bitcoin through a processor, where the state, can either receive dollars, receive Bitcoin, but at the very least use that as the network, the rails. A bill that establishes a strategic digital asset reserve from forfeited assets, right? So not necessarily a new appropriation, but that the state can stop the forced immediate liquidation that's currently required. There's one that protects the rights to mine Bitcoin and self-custody Bitcoin, and prevents municipalities from singling out mining in zoning areas where other data centers are already permitted. A bill that authorizes, it's more of an election bill, so Bitcoin campaign contributions. And then the one that I'm most excited for your audience to hear about, which I think will be something like the Digital Asset Commerce Act. And it's like the private sector companion to everything else. So the first would authorize Rhode Island entities, so LLCs, LPs, and corporations, to make distributions to their investors in Bitcoin with proper disclosures, with valuation methodology, and a fiduciary safe harbor. The second article would create a formal digital asset treasury company designation, which would be filed with the Secretary of State for operators who hold both income-producing real estate and Bitcoin as a core treasury reserve, as you're doing, Kenny. Article 3 sets the state tax treatment for all of it. And then Article 4, which is the one that currently there's no other precedence for, but I think would be really cool, is creating the first statutory framework in the country for commercial lease security deposits to be held in Bitcoin. And frankly, that article is modeled on Westmain. It's on your business. It's in Middletown, Rhode Island. It's, hybrid real estate and Bitcoin treasury. And, you are in the findings of this bill. So each of them will stand alone. Each will have precedence. And 5 out of the 6 don't have any sort of new appropriation. So it's not going to cost the state anything, but the signal that we would send to the country would be insurmountable.
That's exciting stuff. I mean, I think that could put us on a trajectory to be in the top 10 states to do business, right? Because you talk about Kraken relocating from, I don't know where they were previously, but they went to Wyoming because of the Bitcoin policy that was created there. So what you're trying to do is great, trying to attract business and go from the bottom to the top. And I think it's going to make a name for Rhode Island once again. What do you think, Chris? Because I know that you mentioned that you pay attention to the stuff out here in California, as far as legislation that's being worked on here, and seeing Rhode Island, the small state, kind of go into second gear and try to make a name for itself. What do you think? Because California is at the bottom of the totem pole too.
Yeah, we're sitting shoulder to shoulder with your 48 and 50th ranking there, Dan, for sure. I love it. I mean, it's music to my ears, and I think, frankly, it's you guys are playing. It's a competitive advantage. You guys are playing the long game. Kenny alluded to it a few minutes ago, but we've talked a lot about just what it means to be an owner and operator of commercial real estate. And as you get into the end of this decade and into the 2030s, when you think about allocating capital, when you think about where you're going to invest, right? It's our view that the jurisdictions that are the most business friendly and Bitcoin friendly are going to attract capital, labor, investment in business disproportionately, right? Full stop. So if regardless of your size, if a state like Rhode Island can be a first mover in laying down some policy legislative framework and signal to the marketplace that, hey, not only are we open for business, but we understand Bitcoin and we want to help you integrate Bitcoin practices and policies into your business. Doesn't matter if you're the biggest state in the union or the smallest, you're going to have your pick of the litter when it comes to intellectual capital and just overall business opportunities. So kudos to you and your team for helping kind of lead that charge. I was telling you before we hit record here, one of the commercial real estate organizations. It's a national organization. I sit on the board for the local Southern California chapter, and 90% of what we do is legislative work, right? And whether it's crafting and drafting our own bills for the commercial real estate industry, or taking a position on a bill that's been proposed by some other organization or entity. And to be honest with you, just seeing behind the curtain how the sausage is made, it is incredibly demoralizing and disappointing. We spend so much darn time playing defense, fighting from our back foot on, to your point, half-baked ideas that they were legislating before they did any kind of homework or research. And I'm all for that process, but you can't be skipping steps to the detriment of your constituents and ultimately the broader state's efforts. So there's one provision that comes to mind specifically here in California. It was in LA County last election cycle called Measure ULA, and without making a long story of it, it put a very onerous tax on properties at certain values, right? 5 million up and down, regardless of the profitability of said asset. And that was under the guise of, we're going to generate additional tax revenue, and it's going to go to all these great causes for the city and the county, and it's going to be hunky-dory. Well, that was not well thought through. It was not well researched, and ultimately threw a wet blanket on what was otherwise a very hot real estate market, because the investors, the developers are like, I'm not going to pay an additional 4.5% of my gross sale proceeds just because. So it literally slammed the brakes on a local market here. The county has been backpedaling ever since, trying to figure out ways to modify and even repeal it, because they lost a substantial chunk of tax revenue because of it. And as you can imagine, that's just one of many examples in the state of California. So long-winded way of saying, kudos to you and your team for kind of leading the charge here, because it's incredibly important, right?
Yeah, I appreciate that. And I guess if I had a question that I'd pose to everyone is that if you had to design one state level policy, maybe federal, or probably state level, maybe it's California, Chris, policy change that would maybe most help the operators in your audience, like, what is it? Like, is there something that if you could sit down, put a pen to paper and write a bill about, because I mean, part of my job is that I'm writing these types of bills. So, would love to hear, how we can make maybe it's a blueprint for blue states, right? And we could, pass something that would be smart, business forward, but also consumer protection built in there, that kind of hits both of the concerns that legislators may have. So if there's anything you could think of that would maybe help your audience, help our listeners, I'd be all ears.
I think the guys like us, we kind of take it for granted, right? We're living and breathing this, day in and day out. So it's a little bit unfair from that standpoint. But for the broader market, I think we're still so early, and to your point, you're very much in the education phase still. So regardless what state, regardless what jurisdiction is, we need to start with the fundamentals, right? Making sure that the fundamental building blocks, the best practices, are enshrined into law, right? So what is that? That is self-custody, right? The privacy, ideally, medium of exchange, right? De minimis exemptions for now, but again, laying the proper puzzle pieces, for this emerging asset class. So self-custody, privacy preserving provisions are, what I think are hands down the most important at this point. What about you, Kenny?
Yeah, I would agree with what you're saying. I spoke with Dan about some of the things he's working on, and I mentioned that I think he has a good starting point. He spoke about privacy and the right to custody. And I think that's, the first step. My mind likes to go a little bit further onto like once you move past all the basics. But it's very important to have the underlying fundamentals, as you put. But I get excited for, some of the stuff that Dan just went over, like the Bitcoin security deposit type of thing. Now, I think Rhode Island is interesting because you can technically do that today. You don't need it, but it should be like an easier thing to get past, because it's just clarifying it. It's just clarification. It's not like you're not like actually, unlocking anything except for giving it a definition and clarification. And, Rhode Island has a bunch of interesting kind of real estate laws because it was one of the original 13 colonies. And we were going over, Dan asked me to like think about this question. And one of the things I noticed that Rhode Island's one of the only states that has a perpetual lease. Like you can do a perpetual lease on commercial real estate. There's other states that have like, you can, like, I think Colorado, like the way it's written, you can do 999 year leases, but Rhode Island has this perpetual lease language better than any other state. And so that pairs very nicely with Bitcoin, because Bitcoin is like pristine collateral that never erodes. It's going to be there forever. And we've seen what Strategy has done with their perpetual preferreds. And, this kind of opens the door to do perpetual rental leases with Bitcoin security deposits. And, it's like a whole new world. So I get excited exploring that thing. But I think Tim had a message for us.
Yeah, we're about halfway through, about the 30-minute mark. So we're going to take a quick break and be right back with Dan, Chris, and Kenny. Quick note for property owners listening to the show. If today's discussion sparked questions about how these strategies might relate to your own building or portfolio, we're always happy to have a conversation. No sales pitch, just a thoughtful discussion about your property, your capital structure, and the options available in today's market. You can find our contact information in the show notes. All right, we're back with Chris, Kenny, and Dan, and talking about a lot of perpetual things today. Chris, did you have any other thoughts on perpetual leases, perpetual structures, perpetual thoughts?
I got a lot of perpetual thoughts, but none on perpetual leases. That's actually the first time I've heard of a perpetual lease. So I have some studying to do on that note. Dan, I joke with Kenny a lot of the time, just saying he likes to jump to whatever topic we're on. He likes to jump to the 201 or 301 level, right, of the discussion right out the gates. But going back to your question on, where could we be focusing our energy and our efforts on this education process? The fundamentals aside, I think some of the things that you had mentioned there are, you hit the nail on the head. Security deposits are an interesting one, but the structuring of businesses and partnerships and distribution of the Satoshis to the LPs. I can tell you firsthand, and Kenya will corroborate this, the folks that we're talking to in the commercial real estate industry across the country, those are the questions they have, right? They've already done the basic work on Bitcoin. They've went down the rabbit hole. They've done their 10,000 hours on that. Right now they're on to the next, and they're building businesses and investment portfolios in and around the Bitcoin standard. So the next step is, how do I navigate some of these whether it's accounting or legal mechanisms to be best positioned, protection, liability, all of that. Particularly on the real estate funds, one thing Kenny and I talk about on a regular is, if you're raising a new fund, right, and you're going out there marketing it as a real estate fund with Bitcoin upside, right? I think one of the core features that should be non-negotiable is that when the deal comes to a conclusion, right, there's an exit, there's a liquidity event of some kind, the LPs need to be distributed Satoshis for that segment of the deal, right? On the real estate, you can get paid out in US dollars. We all know how that works. But if I'm an investor, I'm looking at, maybe investing in Westmain or something of the equivalent, and I know there's this asymmetric opportunity with Bitcoin, I want to make sure that I'm maintaining that all the way through the deal. Right. So one question is, how do you structure, or how should you be structuring the deal, right, to make sure that all the participants are getting, their exposure to their Satoshis, if they, their proportionate share of the Satoshis. How does that play through on a tax standpoint, right? A lot of real estate guys will structure a deal as a tenant in common. They'll structure it in ways where you can do 1031 exchanges. Sometimes you can't. So if you're spinning up a new fund today, and that is a part of the long-term, just strategic consideration, you need to be doing that now, right? That you need to be structuring and thinking about that properly today. And the downside, or where the challenge comes in is, the states don't necessarily have that framework in place today. So, going to that 201 or 301 conversation, that's, I think, where, the conversation should be going.
Yeah, and I think this goes back to the study commission, and I think that if and when the state starts studying it, there are a handful of people here in the state that have testified on behalf of bills. There's myself. There is the Rhode Island Blockchain Council. There's members of the Bitcoiners group that Kenny mentioned earlier that have gone on behalf, testified on behalf in favor of some of these bills. But ideally, it's putting the pen to paper, introducing an entire subset of well thought out, well researched, and in our state, being very clear that we are entrenching these bills with what other states have been doing, and that there are companion bills. There is some sort of historical precedence of what these bills can entail, and specifically those in probably more business. Well, they're all more business friendly states, but hopefully one's closer to the top. And so the thought process is that the subcommittee will very likely meet either every month or bi-monthly, depending on how they structure it. They have to submit an interim report a year in, and it's a 2-year process. But the thought is, if they're meeting monthly or bi-monthly, there's going to be either 12 or 24 opportunities to present. And I think having members from, it could be everyone on this call, it can be members in the Rhode Island community that have gone through the same process of what Kenny's doing with Westmain, and being able to talk through some of the analysis, talk through some of these types of problems. I think this is what lawmakers should be listening to, because then you're getting not just your Bitcoin 101, but you're getting real estate 101, 201, and here are some of the tax inhibitions that don't make it quite easy to operate on that Bitcoin standard.
Hey, Dan, I wanted to ask you about, I know that this kind of overlaps with AI in many ways too, right? The regulations and things that are happening with AI, and how you also have a voice when it comes to that in Rhode Island. Maybe not so much, but I think you were mentioning that that is going to be helpful as far as turning around the business growth when it comes to going from 50 to top 10.
Yeah, I mean, I think it's just being as open as possible to some of the nascent technologies that exist, right? And just having a committee that is in charge of doing that, right? Of passing legislation is important, whether it's Bitcoin, whether it's blockchain, whether it's AI, any other emerging tech. But it's passing laws that are, and again, we'll say it till I'm blue in the face, but it's passing those laws that are business friendly as well as consumer protection, not just consumer protection focused, without any concern for whether it's commercial real estate, residential real estate, et cetera. I think there needs to be we want consumer protection for a buyer or a tenant, but we also want to facilitate that business and be mindful of the landlord or the owner of the property.
Well, the reason I mentioned that is Chris had brought up a few episodes back that in Santa Ana there was some legislation passed about not using AI property management tools to collect rents. So we wouldn't want to see you do all this great work on the Bitcoin front and then have some ridiculous kind of carve out for AI that you can't use it. So just wanted to kind of throw that into the mix and get your input there.
Yeah, no, I mean, it's all important. And I think that, well, we can use AI as a tool, as a force multiplier for good. So I think to the same token, I'll be frank, I have built out my entire website with the help of Claude, with the anticipation that Squarespace wanted another $150 next year. And I realized that in 11 or 12 prompts, I was able to carve out this entire site. And that's just one example of obviously what we can use it for. But as far as I have seen so far, the AI legislation in Rhode Island hasn't been inhibiting. But it's a great point, and it's something that I will absolutely keep on my radar when it comes to either this legislative session or the next.
And I mean, when I was going through some of the pending bills in Rhode Island, Bitcoin related or otherwise. I mean, there was one that was on the docket relating to DAOs, establishing and giving DAOs, a clear legal status, which, from the outsider looking in on the other side of the country here, I thought that was very interesting and encouraging, to say the least.
Yeah, I mean, it's great. We actually have, it's really neat. There's some people in the state, and that gets a little bit further away from kind of my focus being on Bitcoin. But again, I'm happy to. I still think a rising tide lifts all boats in this industry, and if we have sensible legislation. But we have some really great people here in the state that were able to come and testify on behalf of that bill, and are helping to make amendments to that bill, because there are, I think, 5 or 6 other states that have done something similar. Another way to get a new business, a new type of business here in the state. Vermont had passed. They were one of the first states to pass friendly laws. Like, Vermont's one of the bluest states in the country. So if Vermont's passing a law that helps govern DAOs as an LLC, where are we, right? So I think there's definitely some room for us to continue to improve, but again, improve in a way where we make sure we study, then we pass the legislation. It is a slow roll process. We do crawl, walk, run here in Rhode Island when it comes to most legislation, with the exception of, again, the ATM bill, which was pushed by a pretty heavy-handed lobby. So,
and what specifically did you not like? Bring me up to speed on the ATM bill. It's something that I've been having on the back burner. We may want to throw one of those into Westmain, but I know that there's a big spread on those. I haven't personally used one, so can you give us the rundown on the ATMs?
I mean, there are. I think the concern with ATMs is that it's a tool for scammers to use, and allows them to very quickly get people who are frantic because they've been scammed, to send this money, and they don't know they're being scammed, but to send the money to a scammer. There were the spreads are high. The spreads are high, and I think the spreads are high because of the types of laws and legislation that our state and others have put in, which doesn't look at the root cause of the problem, but penalizes the owners of the kiosks. So if you, for example, bought $2,000 worth of Bitcoin and wanted to send it, needed to send it to this scammer, and you're getting whatever, you're sending it overseas, wherever it's going. You go on, there's a wall of text very similar to if you were buying a gift card at a drugstore, and it says, "Are you being scammed? Yes or no?" It's a very, it's an easy yes or no question. You don't know if you're being scammed, so it's a no. And then it sends. And as we all know, Bitcoin is finite, and it's finite in 60 minutes, and that's it. And it's like, there's no going back. So the problem with that is the law, instead of enforcing some sort of a hold period, or enforcing some sort of active engagement instead of passive wall of text, they decided to put the onus on the owner of the crypto kiosk to have to pay back if someone realizes they were scammed in some sort of a 30-day or 60-day window. And so, as you know, it's final, and 2, it's a volatile asset. So they could be on the hook for a lot more, depending on what happens to the price over that 30-day period, where someone claims that they were scammed. And even if they claim they were scammed, there's no guarantee that maybe they just weren't scammed and decided now to just scam the company. So I think and that has caused most crypto ATM companies to leave the state, instead of going with and there's other issues too, like having an entire compliance department, having to sign up for a security, like a Chainalysis or something it ends up costing 6 figures a year for someone to operate just one ATM. Whether you operate 1 or 1,000, you fall under the same guise of needing all of these different security measures in place, instead of just having a 72-hour hold window. Because if and at any point in those 72 hours, you send the company a message saying, you know what, I think I was scammed, they stop, right? They stop, the transaction doesn't go through because it's in a hold period. They get their money back. Everyone's all set. And if you wanted to buy Bitcoin, right, of course you can go on an exchange and pay, 60 basis points on most exchanges to buy Bitcoin, right? But if you wanted to buy Bitcoin from an ATM for whatever reason, you can do so, and there's a 72-hour hold period. So and it's the same thing that most places you buy Bitcoin, most exchanges, they won't let you withdraw it to your bank immediately because they want to make sure the fund's clear. And so I think having something very similar for ATMs would be, it would still serve the customer, but it would also serve the owners of those kiosks.
I mean, I think that just underscores the the education topic that we kind of laid out at the outset here, right? I mean, that kind of has remnants of some of the stuff that the wallet providers have had to deal with the last 12, 18 months or so, right? Providing information that they flat out don't have or can't access, right? So educate. It comes back to education, 9 out of 10 times, if not more. And going back to one of your previous comments, Dan, I mean, one thing that we have really kind of been able to hone here with this real estate conversation and community is, rather than trying to orange pill the real estate crowd, right? Meet them where they're at, right? Ask a question, or if you're having a conversation about the real estate, right? I like, this is my really low hanging fruit, my easy example. I always ask somebody, hey, are your expenses increasing faster than your fixed rent escalations? That's an easy one because the answer for everyone is yes, right? The only question at that point is to what extent. So once they say yes, and you can, the door has now been opened to, hey, maybe there's a way to mitigate that a little bit more than you would have been able to otherwise, right? And they don't know that you're going to backdoor it with Bitcoin, right? You're going to come 360 degrees there, but there's becoming more and more of these examples, right? Whether it's the example I just laid out and using Bitcoin as a savings vehicle. You have the tax treatment. Real estate investors are experts at not paying tax. And because Bitcoin is classified as property today, and the wash sale rules don't apply, there's some interesting approaches and strategies you can take there, in addition to just using your Bitcoin as collateral. So if you can find what makes that person or that group tick, right, and you can meet them where they're at and ultimately tie it back to Bitcoin, I think your efforts will be a lot more fruitful.
I'm just taking it all in, moment of silence, because there's so much to unpack. I get really bullish when we have these kind of conversations, and then just realizing that Bitcoiners are working it from every angle. We're over here focusing on real estate, and there's a lot of overlap when it comes to to just Bitcoiners in general. And I think we're going to win because we're just covering it from all sides. We're thinking of like the worst case scenarios and how to protect from those, and how to make it bulletproof, how to make these builds and businesses bulletproof so that they succeed and that they're here for the next 10, 20, 50, 100 years.
So I have one more question. That's where I know we're heading up on the top of the hour, but like a BRE Index methodology. So I'm wondering, and I'm going to put on my future cap here, but maybe my tinfoil hat, right? Because I think Bitcoin's total addressable market is what, $400 trillion, something like that. But when that chart flattens, right? So when housing priced in BTC stops dropping, does that mean inevitably that Bitcoin cooled, or is real estate finally catching up? Because those are two very different stories for legislators.
So I just want to let the viewers know that Dan's talking about on our website, therealestatestandard.com. We have a tool called BRE Index, and it's Bitcoin Real Estate Index, and it's tracking a single family home. And you can scroll down, you can see the past performance. There's some charts and numbers. And then we have future projections. And you can see today in 2025, the average home at 420,000 is 5.51 Bitcoin. But if we extrapolate out to the year 2045, you can see that the projected cost, and this is assuming a 29% CAGR, compound annual growth rate, will be 99% cheaper. And so the question is I think Bitcoin's staying the same, right? Bitcoin isn't moving in price. It's the US dollar moving in price. So really it's just showing you how bad inflation really is. And this should be the wake up call to all the politicians and all the people in office, because if they go back 10 years, I just pulled it up on my screen, and you look in 2015, it cost 1,050 Bitcoin for the same house that now costs 5 Bitcoin. And if we extrapolate out, it's going to cost a fraction of a Bitcoin. So yeah, Bitcoin, there's a saying in Bitcoin, 1 Bitcoin equals 1 Bitcoin, or 1 Bitcoin equals 100 million Satoshis. And so, that is, the common denominator. That's staying flat. The dollars, how many dollars per Satoshi, that's what's moving. But go ahead, Chris, sorry, cut you off.
Oh, no, with your 29% CAGR, I'm just thinking about how bearish you are.
Well, we have a toggle that you can switch it over. If you're on the bull side, it's 45%. And it actually goes to 0, 100% cheaper, because it goes to the third decimal place. So, so you're talking less than 1 million Satoshis for home, for the viewers at home.
Yeah, Dan, all just kidding aside, on the residential side, I'm not going to necessarily opine on that. You gotta make some lifestyle choices at one point or another. You got to do what's best for your situation, your family, and I'm not going to be pretend to be an expert on all those different questions for everybody. But on the commercial side, when you're having this conversation with policymakers and local owner operators, I think it's incredibly important to impress upon them. Using the BRE Index, I think, is incredibly useful, because it shows the sense of urgency, right? This is not like the topics that we're talking about. This cannot be done over 2, 3, 4 election cycles, right? Like this is an immediate need. It is it should be a high priority. It needs to be done now, right? We need to start thinking and talking about it now. We need to have the uncomfortable conversations now, right? Because the sooner we kind of rip the Band-Aid off and bring everybody together and start, leveraging our collective brain power, what does it mean? What's the best way to move forward? The sooner everything's going to be, back to normal, quote unquote. Right? Or maybe not normal, but it'll be far less disruptive and far less volatile to get to the other side, right? Now, commercial real estate, if you think, whether it's Bitcoin or AI and automation, whether it's the fourth turning thesis that you may or may not prescribe to, whether it's the demographics, there's all these different major macro and secular trends taking place that I personally think make this cycle a little bit more unique than past. When you think about all those, and then you bring it back to the real estate, right? This depreciating, monolithic asset, those two things are fundamentally incompatible. So if you're operating under the assumption that we're living in a 5 to 7% cap rate world, right? Cap rate is a real estate metric. If you're operating in this, under the assumption that loans are going to be 7 to 10 years and they're going to be amortized over this period of time, and everything is that the successful strategies of the last 30 years are the successful ones of the next 30 years, That is an incredibly, incredibly dangerous and ignorant perspective to operate from. So again, to bring it back full circle, the using Kenny's index there, that should impress upon everybody the sense of urgency, the topic that we're talking about. And it doesn't matter if it's the $350 trillion real estate industry or any of the others, right? Because they all need Bitcoin, equally, right? Just as badly. So if you're in the media space, if you're in the marketing space, the healthcare, the legal field, I don't care. Right? You need to start having these conversations and figure out how to integrate Bitcoin into your business practices, your policies, all of it. Because the ones that don't, they will lose out to the first movers that do. So again, this comes full circle again to first mover advantage and the states and cities and counties and all the jurisdictions that are going to attract capital, labor, businesses disproportionately because they, had the foresight and the willingness to, learn and think about Bitcoin.
I think that's a good place to close it. Do you guys have? I'm taking Tim's job here. I'll let him do that.
Any closing thoughts?
Dan, I'll turn it over to you. I've talked enough here today.
No,
Listen,
firstly, again, appreciate the invitation. It was great to be able to chat with you both, well, all three of you, about the work that we're doing here in Rhode Island. I think maybe I'll drop a nugget that maybe you can get an expert on hyperinflation to come in and see what does hyperinflation do to a fixed loan, and maybe have that discussion, because I think that would make your BRE chart look even more attractive. But no, I guess I'll go plug right now. If you want to go to my website's RIBPI.com, you can find out all the information on some of the legislation from the state of Rhode Island, and all of the great work that we're trying to do to educate lawmakers and the rest of the public on this nascent and transformative technology.
Cool. And I'll just sign off by saying, I think all of us will be in Las Vegas next week. So if you're watching this and you want to meet up for coffee or just to say hi and talk Bitcoin and real estate for a second, reach out to us on X. And yeah, excited for that.
Absolutely. Chris, any closing thoughts? We'll definitely see everybody out in Vegas a week from today.
Nope, I'm good to go. Back to you, Tim.
Awesome. Well, that's it for today's episode. If this conversation was useful, please share it with a partner, a client, someone making decisions in this marketplace. New episodes drop weekly on our channels. And so until next time, stay disciplined, think long-term, and stack sats. This is the Real Estate Standard. If you enjoyed today's conversation and you own commercial real estate, we'd encourage you to think about how these broader shifts might impact your own property over the next decade. Many owners are starting to reconsider how they structure their balance sheets, manage capital, and position their assets for the future. If you'd like to explore how some of these ideas might apply to your own situation, you're welcome to reach out. We work with property owners and investors to think through strategy, structure, and long-term positioning in a rapidly changing market. You can find our contact information in the show notes. And as